Well, welcome everyone to the first ever NCC The Tower podcast. Appreciate you being here today. My name is Brian Skutta, and I'll be the host for today's podcast. And my performance will determine if I'm the host for the second and third and fourth podcast, but I hope to do a good job for you guys today. The Tower podcast is new for NCC. It's something that we're doing to better engage with the industry and our clients around what we're seeing on a myriad of topics, not just NCC centric. But we look forward to having our partners on here with us. We look forward to having our dealers on here with us, and we're super excited and appreciative you joined us today. Today, we're talking about a really specific topic of fraud and affordability, which we'll get to in a little bit. But before I do that, I wanted to pull in our guests. I really appreciate them taking the time to be with us today. And with that, I'll get us started with Ed French. Ed, tell us a little bit about yourself.
Brian, thanks for having me on this. This is a wonderful way to help dealers across the country. I'm 54 years in the retail car business, owned and operated many franchise stores, 2 independent stores in my career, semi-retired and moved into a consulting business in 2011. I have clients all over the country that I help in this very area with compliance and red flag rules, also credit, and help them with their used car operations, new car operations, and specifically work with their managers to improve their efficiencies. Have a very successful GM, General Managers Boot Camp, that I've actually helped many managers become GMs and in fact, even dealers. Happy to be with you, Brian, and hopefully we can share some great information.
Yeah, well, Ed, thanks for being here. You and I have known each other for a number of years, and I've gotten a chance to see you in similar podcasts like this across the industry. I appreciate everything you're doing for dealers, and really thank you for being here today. Jason McCall, let's tell us a little bit about yourself.
Sure. I don't have Ed's depth of experience, but I did spend over a decade in retail, running stores and working in stores before I got recruited by DealerTrack really early on to help build their compliance program back when red flags was something no one had even heard of.
And Jason just politely said that he's younger than Ed. So in case you hadn't processed that one, that's all to that.
Absolutely true.
We know dealers and our audience have a lot going on. So let's just go ahead and jump right in, guys. And I want to start with fraud. I think it's generally understood that fraud is a big problem and that it's growing. And I'm a finance guy by nature, so I actually brought some stats that I wanted to read for you guys just to color this a little bit. So, and some of these first set of stats are from the fraud trends report that Point Predictive put out in April of this year. They really speak to last year's numbers. So fraud in automotive was 10.4 billion, up 13% year over year, which is a massive number. And then I think the other thing you look at is diversifying, right? So first party fraud is still 69% of fraud. So first party fraud is borrower fraud, if you will. So misrepresentation by the borrower, but it's really getting diversified in its sophistication. So we're all well aware of synthetic ID fraud as came on the scene in the last several years, and it's been growing rapidly. In fact, just on the NCC data business, we get over 2 million hits a year of some version of synthetic fraud risk across our dealer base. And so it's very prevalent and continues to grow. But I think when I read those articles, the first thing I say to myself is like, what does that mean for the average dealer, right? What examples have you guys seen, lying across the dealer base? And maybe Ed, we'll start with you.
Sure. I do a lot of consulting, Brian, and I've got clients scattered all over, all regions of the country. And just one example stood out to me, and it was actually in the state of Utah. Customer visited the store with his fiance, wanted to buy 2 vehicles, wanted to buy a Volvo and a Chevrolet Tahoe. And the dealership did the norm, what I would call what was normal, which was completion of the IntelliCheck, credit application review, verification of all the supporting financial documents. The customer provided a credit application that didn't have any fraud or red flag alerts. He brought along a JP Morgan bank statement that showed an account balance of about 40 grand. 4 days later, after delivery, they discovered that the customer had used his father's social security number, employment information, because both individuals shared the same name. His father was actually living in an assisted senior living facility about 80 miles away. And by the time we figured it out, by the time they got the cars back, it was 3 months later. The cars were, as you could just imagine, Brian, heavily damaged. And the write-off was nearly $50,000 just in that one particular case, just because we had someone that knew how to get a deal through a typical car dealership without some of the things that NCC provides, which If you think about it, if you did an intelligent fraud check and you had somebody come in with a bank statement, and what I would also submit to you, Brian, is dealers get excited. Here's a 2-car deal. Well, we're going to get 2 cars on the road today. And they have a tendency to get so excited that they overlook some of the details. And that's exactly what happened here.
Yep.
Hey, they got a bank balance of 40 grand and they've got good credit score, even though it was his father's, and he's got employment, and boom, there you go. We got 2 cars on the road we can't find for 3 months. So it's rampant, Brian, and dealers have really got to begin to think about putting fraud check at the front of a deal, not at the end of the deal.
Excellent. But I'm going to come back to that point because I think that's spot on. And so I had a couple other stats. According to that same point predictive study, 44% of dealers dealt with a synthetic ID fraud case in the last year. And then 62% saw forged document fraud. And so here it is, 4 out of 10, 6 out of 10 dealers are talking about just 2 use cases of fraud that are emerging. And so when I looked at internal data from NCC, when I first joined this company 3 years ago, I determined that the average dealer has $100,000 plus fraud exposure in any given year. And it was interesting, just a few months ago, I looked at an Experian report that was put out, and it talked about the fact that the average dealer will experience 4 fraud transactions a year, and the range of impact per transaction is anywhere from 10 to 50,000, right? And obviously that's depending on the type of store you are, the price point of the car. So I've been able to co-validate through Experian's data the fact that like the average dealer is sitting on an $80,000 to $120,000 fraud exposure every given year based on just running their business. And I think that's pretty fascinating. I think that you have to realize that while we run tens of millions of credit reports, these sort of isolated high risk transactions are in the low single percentage digits and even less than 1. But when they hit, they're meaningful, right? Jason, let's maybe shift over to you. You talk to a lot of our dealers on a daily basis. You're talking to them about this topic as well as many others. What are you seeing and hearing from people you talk to?
I have dealers talking about synthetic fraud that hung up on us a year ago and said it doesn't happen, right? I'm in the middle of nowhere. This doesn't happen. And we're getting callbacks every day. And when we look at internally the data that we're running on how many synthetic fraud hits we're getting internally, you're talking about 3.5% of the business, which doesn't sound like a lot until you realize that each one of those represents an entire month's worth of net profit or more to a dealer. I know of a dealer in the East that I know of personally, it hit him a lot harder. He had a dealer group. It was a mid-sized town. He owned several dealerships in that town. And there was a fraud ring that got him for a whole truckload, 13 cars in a weekend on a bust out case with synthetic fraud. And they were on the truck and gone before anybody could do anything about it. He never got any of those back.
You know, in the brief few minutes here, we've established this is a really big problem. It's costing dealers a lot of money. Even though it's a low percentage, it's a high pain rate, if you will, on one individual car, let alone 13 in a bust out case. So what do we think needs to change to be better at this?
I think it's like what you said, Brian, is what you were coming to. We've got to move fraud to the front. And it's not enough to verify a driver's license because a good fraudster has a real driver's license on a synthetic fraud, potentially does. It has to be a layered approach. It's not just enough to do the driver's license. It's not just enough to do the red flags.
Bust out fraud, according to Point Predictive, up 26% over the last 2 years. And then I thought some other interesting things about fraud. It's not always total misrepresentation, right? So one stat, 70% of early payment defaults could have been tied to warning signs of fraud at origination. So it just tells you things are being missed in the process. And then income and employment is a really understated, misunderstood representation of fraud. And according to that same report, 43% of loss exposure is income and employment related, right?
Brian, I'm encouraging my clients to do the following. Act as though you're using TSA PreCheck. What we do when we show up to fly somewhere, our check-in to the front, and they verify who you are, where you're going, how many bags you got, and it expedites the process for getting through security and getting on an airplane to go on vacation or wherever you need to go. So I'm encouraging dealers to begin to formulate a plan with their sales process by moving fraud to the front. And frankly, if you explain it in some sort of parallel manner that customers are used to, they say yes almost every time. We want to save you time by the time you get ready to sign your loan documents. So we're going to send you through TSA pre-check now, making the assumption that you're buying the car, which is also a nice trial close, and do the fraud check up front. So if you move it to the front using a parallel thought process to something that they're already used to and making it fast and easy, we never, and I'm using this successfully with other clients, we never have anybody say, no, I don't want, I'd rather spend more time here at the end. So I think we've got to change our minds about what we're doing at the beginning of a sale, stop doing the qualifying questions as much and start doing the investigating that these tools can prove to be so invaluable.
The technology enablement to make that easy is we have it, right? The way that I've looked at it as well is that this is a consumer benefit, not just a dealer benefit. You talked about the time, process, and savings, but as a consumer, you also, I think, want to know that your data is being protected and that you're using digitally encrypted, safe environments around your secure information. You can't go very far without hearing about a data breach or some other risk associated with your information. And when you're in a car dealership that's often been a paper environment on a lot of critical, sensitive information, I think it's important to digitize that. And I think, to your point, it's a selling value prop to the customer as much as it's a protection mechanism for the dealer, right?
If it becomes the customer's idea to get fraud moved to the front and get validated, they'll do it every time just to express lane themselves through the process. So
Yeah,
absolutely true.
And I'll give a little personal example here. I was helping my son buy his first car, right? So I'm gonna co-sign on his vehicle and help establish his credit. And what was really fascinating to me is that they brought me a printed piece of paper and had me fill it out. And I watched that paper leave my hands and go back across the floor into a desk and sit in a folder. And then as I'm checking out with the car 45 minutes later, dealer did a good job on getting me out of there quick. I'm asking about that piece of paper and it's just, oh, that's going into the deal jacket. I'm like, well, there's my personal out of wallet information sitting in a deal jacket. Just an example of an unnecessary risk for both the dealer and for me as a consumer.
Oh, Brian, I think paper is still the biggest compliance threat. In addition to fraud, it's the biggest compliance threat on the showroom floor. And if we can do what Ed says and to carry that TSA pre all the way into the dealer, into the customer's home, when they start looking at cars and we provide that excellent experience, it's also going to allow dealers. I know a lot of dealers that won't do out-of-state deals anymore because of the fraud, or they're going through this process where they're taking a picture in front of their house with a GIS marking so they can compare it to Google Earth. There's all of the things that are happening out in the market where just having good technology and having good hygiene of taking a fraud to the front approach can eliminate a lot of that work, both by the customer and by the dealer, and still have a safe and secure deal and be able to open up some of those deals that are out of state that they have been unwilling or unable to execute because they've been burned in the past.
Now, Brian, we're one of the last industries to begin to move fraud to the front. Whether it's medical records, whether it's loan documents for a mortgage, whether it's even applying for a credit card.
I want to keep us moving and make sure we have time to talk about affordability aspect of this. Maybe one last question on the fraud front. What do you think's been the hesitancy to change, right? This is an F&I manager's job historically, and that's a tail end of the process. Has it been lack of technology? What do you guys think's driving the lack of adoption here?
I'll weigh in first. I think it's two things, Brian. Number one, it's high turnover in salespeople causing consistent and constant training on it. And so dealers become exasperated and just put it at the end, knowing that they have less turnover in the finance office. Number two is they'd rather be talking about the car than talking about whether a customer has the information that they need to be able to purchase the car. So it's those two factors folded together, frankly.
The finance manager many times is one of the most trusted people in the dealership. He's one of the highest earners in the dealership. And so therefore, because we trust him the most, we're going to pile it all on him. That actually takes away from their ability to earn more money for the dealership because they are focused on the fraud and automating that process. To Ed's point about the training there, he's exactly right, which is why having an automated enforceable process that starts at the very beginning, first of all, it eliminates the training time. You can train salespeople on how to sell and how to engage with these customers, and you're setting up the dealer. It also builds trust. A dealer can build a lot of trust by saying, hey, I want to make sure you are who you say you are. I want to
Obviously.
make sure that we're doing a legit deal, which helps on all ends, even with profitability.
Absolutely true, Jason.
One thing I'll leave you with on fraud, and I did the quick math on the average NCC dealer, and we talked about an $80,000 to $120,000 a year fraud exposure. For $350 a month, you can get every fraud detection tool that we have for $350 a month to protect you against an $80,000 to $120,000 a year loss exposure. I do have basic math from my SEC education, but I'm pretty sure that's a good ROI in terms of protecting yourself from loss. The other thing too that a lot of our dealers do is the ones that have moved fraud to the front. It's not just about fraud. It's about the deal. It's about the experience, and it's really about affordability. So oftentimes when you're doing fraud, you're also doing credit, or credit's closely tied to that. And so we'd love to hear from you guys. In the world we live in of high priced vehicles, long loan terms, we're seeing dealers piggyback the fraud onto the credit report and really assessing affordability early, assessing equity early, assessing what bank can fund a deal early to not only start to position themselves for the best deal, but also make sure that how they're managing the customer's journey at the store and the vehicles that they're looking at and the affordability of what they're looking at is all tied together. So just any experiences you guys have of folks that are leveraging this technology enabled fraud first process right into affordability. And Jason, maybe we'll reverse order here and start with you. I know you speak to many of our clients about this through our own solution sets. I'd love to hear your sort of thoughts here first.
Yeah. So I appreciate that. And we have heard a lot more about this. It's getting the deal funded, right? Getting somebody funded on a car is becoming more and more important as negative equity continues to climb. Rates are fairly steady, but the banks change their programs every month. And I have a lot of conversations about dealers who are frustrated about the fact that it takes so long sometimes to find out what deal. If they're not asking for credit until after they've done the first pencil, we've already put the walls up, we've already done this. If you have a way to, without friction, find out if they are fundable, right? Find out if they are telling you the truth, and then be able to have that pencil done and know when you present that first pencil, rather than the old school of what I used to do way back in the day, is you peel them off the ceiling, right? We say, here, we understand where you're at. We understand what your needs are. Here's where you can buy this car at, and here's a rate and term that is affordable to you. And we know this, we're not guessing. We know this because we have tools now that can provide that information with very little or no friction whatsoever. And being able to do that, again, builds trust, lets you go through the process faster. And the more trust you build, the more profitable deal you're going to have in the end. And it also gives you the chance to, if the customer is out on the wrong car, if they're on a car that they absolutely can't get in no matter what, it gives you a chance to find that right car for them before they come back to the test drive, to make that. So it's not such a harsh, no, you can't buy this car. It can be a much smoother transition into a vehicle that is going to satisfy their needs and wants.
Yeah, I think it's certainly about the right car. It's about the right deal. And then every study you ever see, time spent dealership, it can really attack that. In fact, that ranks higher than price in terms of negative feedback, right? So I think it's another piece of the puzzle too. And how about you with the dealers that you work with? What's affordability look like today? How are things changing in the retail process?
It is the number one thing that consumers and dealers are both focused on. Dealers are focused on it from an inventory acquisition standpoint. Customers are focused on it. I see customers, as I'm watching car deals go through my clients, I see customers walking away at a $12 to $15 difference in a payment. That's how critical, that's the knife's edge that affordability plays in today's marketplace. The other thing, Brian, that is in the background is the LTV that banks are now giving has dropped 12% from Q2 of last year to Q2 of this year. And a 12% drop in LTV makes it extraordinarily hard for a dealer to get a loan approved, especially to Jason's point earlier about a customer with negative equity. And so dealers are now buying vehicles based upon the book value of the car and less about the actual vehicle itself. It's about a vehicle I can actually get approved at a payment. Last month, Brian, 37% of all the used vehicles that were sold retail were $15,000 and under. That only leaves 63% that would sell for $15,000 and above. We're all, as dealers, fighting for that 63% market share. You've got one chance in a car dealership today. You don't have multiple chances anymore. You got one chance. And if you take the wrong shot, they're gone and on to the next place. And we as dealers have to be really understanding. Maybe our budgets aren't as sensitive, but the customers that are out in the marketplace today, Brian, it is ultra sensitive to them. And from a dealer standpoint, if you've got the wrong LTV car and you got a payment that could be $20 a month off, you've already lost the deal before you ever got started. Why not get the deal aligned correctly at the beginning, as opposed to waiting to the end to find out and get that bad surprise?
Because to your point, everybody's a payment buyer. Majority of the market is a payment buyer. And now when you look at the fee structures getting tacked on to the list price of a car, plus the advanced situation, plus more profitable F&I for dealers, which means more product is being bought to protect the higher priced vehicles, that all goes into the same calculation, right? So I think it's becoming more and more critical every day that we pull the deal forward, if not explicitly into the conversation, implicitly into how we handle the customer through their journey. So that when we get to F&I, we've got a really great deal with a customer that's been verified that we're going to get papered at the right lender with the right deal structure for us as a dealer. But any closing thoughts you guys like to add on top of our kind of topics for today?
Bringing fraud to the front brings trust to the dealership. Your customers are going to trust you more when you verify they are who they say they are.
Absolutely. Appreciate it, Jason. Ed?
The dealership ecosystem has dramatically changed since COVID. And since that time, we've seen ups and downs in inventory management, ups and downs in human capital. And what I would submit to all of you is this: we're about to see even more massive changes with the advance of AI and with the advance of consumers trying to use AI to take advantage of an unsuspecting dealer. Make sure that you understand how important laying fraud at the front and laying a car deal out in concert with fraud protection makes the deal go so much faster. Because frankly, with gross compression that's happening right now, we have to put more car deals through our dealerships to be able to survive. And to do that, you've got to have an efficient process so that you're not selling one and then go chasing it to repossess it at the same time. So we have to become more efficient and understand that the ecosystem's dramatically changing.
Perfect. Yeah. On the topic of just fraud alone, put affordability to the side. For the average dealer out there, you can protect $100,000+ of risk for $350 a month. So that's just a no-brainer for me. And the technology to enable a good customer experience while protecting your dealership exists, right? So anyway, guys, thanks again for joining us. Thanks for being a part of the Tower podcast, and we'll see you soon.